Good morning, good afternoon, and it's the 64th Emerging Growth Conference and day one of our two-day Super Virtual Investor Conference. I'm Anna Berry. So just a few notes. Today we're running until about 4:15 Eastern. Now when we switch to our next company, you'll see a black screen for a moment, but don't go anywhere. It's just us moving over. If you experience downtime, just refresh your browser. Usually that restarts everything. Our platform does work best on Google Chrome, so if you're watching from an Apple device, you have to hit that play button to start the session. And remember, all of our conferences, they're uploaded to our Emerging Growth Conference YouTube channel. So subscribe at youtube.com/Emerging Growth Conference. Now today, during each company's presentation, you can submit questions through our webcast module, and we will attempt to address as many of these at the end of the presentation. Let's begin. Welcome back, AGBA Group Holdings Limited. Established in 1993, AGBA Group Holding Limited trades on the NASDAQ under the symbol AGBA and is a leading Hong Kong-based financial service company serving over 400,000 customers. It's organized into 4 divisions: platform, distribution, healthcare, and fintech. The group recently announced updates on change of board members and structural change in the company. We're happy to have AGBA's Group CEO. Welcome back, Wing-Fai. Nice to see you.
Thank you. Good morning, everyone. Well, thank you for joining us. If I may, I'd like to take about 10, maybe 15 minutes of our time, kind of just go through some of our latest development as well as our strength in our franchise in wealth technology as well as healthcare technology innovations. We have invested over $300 million investment over the last four and a half years in developing to where we are, which is by far away the only one who are leading in the pack in where we operate in the regions. So I just want to remind everyone, we are pretty much, I have jokingly say quite often, we are a very large company currently with a very small market cap. As Anna mentions, we serve almost 500,000 people based out of Hong Kong, serving entire southern part of China. And we are number one by far in the US destinations, our RIA business. And we have a state-of-the-art technology, state-of-the-art infrastructure, as well as a training program to support that. At the same time, we also own the 3rd largest healthcare company in Hong Kong. We bought that about 2 years ago. We just begin integrating that into our platform for a number of reasons. But by far away, the most important is cross-selling and upselling the customer, the healthcare business, into our financial services business. And as Anna mentions, we have organized ourselves in 4 major businesses. The first one, which is the distribution business, is our traditional RIA business. It is number one by far. It is very well established. We are almost 2,000 people in that business. And that business is very much geared for growth of China. So far this year, the China growth has been very bumpy, and especially in the last 5 to 7 months, and it's gone to a bit of a deflation as well. But we do believe we are pretty much at the bottom of that cycle. And I would say the worst time was July, June, maybe a bit of August. September was a great month. And we do expect October number is going to be really good. So I do think China have hit the bottom. It's going to bump around at the bottom for a little bit, probably for the next 3, if not 5 months. But I will definitely see the end of the tunnel. And I understand I spent the entire September and most of October traveling around the world speaking to investors one-on-one. I got asked a lot of questions about the state of health of China economy, Hong Kong, and degree of freedom, geopolitical, the real estate crisis in China. But I have to say, as early as late August, we began to see the turn of the economy. I think after 2 months, in September, October, we haven't seen the turnaround economy now. The IRA business, the first one, the distribution business, by far away will benefit the most from the turnaround of the economy in China. Number two, our platform business. That is our secret sauce, guys. That is our secret sauce. That enables us to have a strategic advantage in the long run. That enables us to bring a very high barrier entries for anyone who wants to come to our business. We're the only one who can offer over 2,000 financial products to retail customers in southern part of China. We have a direct access of a customer base of 60 million people. Okay, this is by far away the most exciting financial services market, especially retail financial services market in the world. Okay, and we're the only one who can offer everything under one roof. And the third column is our fintech business. And we started that business very early on in year 2016, when we start investing in some of the best technology companies, some of the financial technology companies around the world. And we have been especially successful in the US as well as in Europe. And in UK, we used to be a controlling shareholder of Nutmeg, which became a unicorn and was acquired by JP Morgan a couple of years ago. We still own, we still is the second largest shareholder of the third largest digital bank in UK, Tandem Bank. We're very proud of that. It's making money. Apart from making money from investing in the financial technology company overseas, what is more important for us is to be able to bring their secret sauce back into our business in Hong Kong. This is our core business. Our core business is in Hong Kong, is in Asia. We learn what we can from overseas and we import it into our neck of the wood. Okay, so the financial technology business is fantastic. It really helped us learn in a great deal. And the fourth column, as I mentioned earlier on, is our new business, which is our healthcare business. We don't take healthcare risk. We don't take balance sheet risk. That business by far away is simply the back office. We are in between the clinic, the doctor, and the life insurance company. We pay in the middle, and we are the customer service center for all the clinic. Again, going between the life insurance company and the clinic and the doctor. We touch on that a bit more later on. And well, I do agree our business is very unique. It's unique for reasons, because we're the first guy. We had the first mover advantage, but at the same time, largely because myself as well as many of my colleagues came from management consultant background. We always want to benchmark ourselves against some of our peers, if not in this market, around the world. And we do that very regularly, not only in our operation, not only in our HR system, but equally important is on an ongoing basis, what is our business model? Which is why, well, we have McKinsey and all the other management consultant firms in our company almost on a regular basis. And we disclose that on our website, especially we want to explain to the investors around the world how we benchmark ourselves against some of the world best company, also how we see our valuations against some of the best company around the world. As I mentioned earlier on, this has been a long journey. It started in year 2017-18, and it cost over $300 million. And we did that through our own technology, through some of the technology transfer, some of the learning we make from the technology company we invested in, as I mentioned earlier on in our third column, in our financial technology business. We are very proud of what we have, and we reside all those technology infrastructure and training and people inside a subsidiary called One Platform. And we're very proud of that business. That business is our secret sauce. It's one of the reasons why we go from strength to strength. And, you know, again, we're the only game in town. And one of the biggest things we have is tech. And I'm a lifelong financial services guy. So it is very hard for me to say, well, financial technology, because to me, without technology, there's really nothing in financial services. So we are a technology company even before the term fintech was invented. And we did that because that is what our customer want. That's what our business want. That's what our strategy require. Our vendor demand that too. Again, as I mentioned earlier on, we did that from a lot of operating benefit. We learned from our partners around the world. We're the largest one-stop financial supermarket in Hong Kong. This page really illustrates what we do. On the left-hand side, we don't manufacture the financial product. On the left-hand side, the financial vendors, okay? Be it the Prudential of the world, the MetLife of the world, or the AIA, AIG, Schuwick, around the world. They all operate in Hong Kong. This is one of the largest life insurance market in the world, as well as asset management. Who is who are here, okay? We don't need to manufacture any product. We take the product and we be in between and we sell it to the right-hand side. Be it retail customer, be it company, supermarket, banks, broker, it doesn't matter who you are. We have all the product. We have all the infrastructure. We have all the technology to help you serve and sell to your customers. That is why we're unique. We did that, again, as I mentioned earlier on, we did that religiously by doing 360 analysis all the time. We ask our customer what they want. We ask our vendor what they want. We now do believe we have a very comprehensive offering across the entire value chain that is unbeatable. There are three considerations, and I won't go through that in detail, but very importantly, I want to tell you there are 4 or 5 capabilities that we must provide. Number one is what we call iCompare. As I mentioned, we have 2,000 products. Having 2,000 products may be easy, just put them on shelf. But what is more powerful, what is more important is our ability to use big data, to use analytical tools, to allow ourselves to compare all the products from different manufacturers for our client. And that requires a lot of technology firepower. That's why we spend all this time, all this money to develop what we call iCompare apps, okay? That is what we provide to our salespeople. That is what we provide to some of our end customers. 2 applications. What do we do? How do we, once you do the sales, often people, when they are thinking about strategy, it's easy to omit what is next. Well, next is not important. To us, that is very important. It's how do you execute a sales? How do you execute a trail? Okay? How do you make sure the customers needs convenience? Okay? When they buy something from us, when they ask us questions, how do we make sure we give them the best advice? How do we give them the most timely response? That is where the application part, okay? The back office operation, that is very important. We are very proud of that. And if you look at the typical life insurance company, they have about 15 products only. We serve over 30 life insurance companies in Hong Kong. So you can understand, 15 company multiplied by 20 to 40 products per customer, per company. We're talking about our capacity, the capacity of our operations is an order of magnitude different from a typical life insurance company. We do that because it offers us incredible competitive advantage. Number 3, sales supports one portal, okay? When your salespeople see customers at Starbucks, at the kindness home, at a restaurant, you want to make that sales, make that conversations the easiest possible. That is where our technology, our AI comes in. We do that. We could do that because our tech. We could do that because we have taken data, big data warehouse for over 10, 15 years, and we aggregate it. We manipulate the data, and we look at the data, and we analyze data, and we shoot it out in a user-friendly format. We could do that because, again, as I told you earlier on in one of the slides, we do that with 360-degree analysis all the time. We continuously collaborate as well calibrate our offering to our salespeople who see customer every day. And fourth, customer performance management tool. Okay, when you have a sales team as big as ours, how you manage the performance of your team is very important. And if you ask me, salespeople are trained, not born. Obviously, there are some very good salespeople who are born, but by and large, most salespeople, good salespeople, most good financial advisors are trained or enabled. This is what we enable the team head, the subordinate, the supervisor be able to have a meaningful conversations about how to prioritize the time, how to maximize the performance of each individuals in our businesses. This tool is very valuable. Again, it provides us a lot of data, a lot of important insights into our recruitment as well. What is good, what is bad. Again, we're in financial services business. Everything is about data. Fifth, sales support and e-training. One of the most important things about our business is the size of our sales team. The size of a sales team go up and go down, depends on where the economy is. As we are talking now, we are on the uptake. We are in the market hiring another 300 to 500 people because we do see the economy turning the corner very quickly. Hiring people is easy. Getting them trained, especially in the high quality training, make sure they do not do crazy things like mis-selling. That is hard. We do that with a lot of technology support. We also have a fantastic team, doing training on an ongoing basis. So that's where we are. Again, as I said earlier on, there are 4 or 5 things that is really key, very important. And number one is our eye compare, our product comparison product, okay? You won't see us talk about it much because it's our secret weapon, okay? We got it with a nuclear weapon kind of strength, okay? Number 2 is our applications. What is applications? It's our back office operations. How do you make it work? How do you make it cost efficient? I think we got it now finally. Third, sales support, the salespeople. How do you enable sales? Make it as quick as possible, as impactful as possible. Number 4, performance management. How is a team organized themselves? Okay, that is key. Number 5, sales support, training. That is how you endure performance. That is how you endure a team. So we are 360, as I mentioned earlier on. We religiously look at our business 360s. Okay, we talk to peers, we talk to our competitor, we talk to our vendor, we talk to our customer, we talk to our staff, we talk to our agents, we talk to everyone. On an ongoing basis, we calibrate and tweak everything we offer on an ongoing basis. Again, as I mentioned, way up front, rather painfully, we are a large company with a tiny market cap. All right, so let's move on to the next one. What is a continued development? I would say, before I dive into it, having spent over $300 million in our technology as our infrastructure, I think we're pretty much done. We don't need to spend another $500 million or $500 or $50 million in it. At most, over the next 2 years, we may spend about $5 to $15 million, depends on how we see things. Some of the things we have already over-engineered. Okay, we have a couple of products we have held back from introductions, and because the economy is not as strong as we expected. Okay, so we have a lot of things up in our sleeve, so to speak. But we do have a continued development program as a company. Again, as I mentioned, at most, I expect we need to have capital expenditure of another $5 to $15 million over the next 2 to 3 years, just to continue the R&D. Number one is our technology that continue to allow us to drive more product. Okay, 2,000 products, is it enough? Yes or no? But it's more importantly is how to enable us to introduce new product. For example, one of the most important things now we are working very fast to introduce into our offering is alternative investment. Or the hedge fund hold a private equity fund. We are very good at it, okay? And our team, the time to market is usually very quick. Two, again, this is one of the products that we held back from introductions because we just don't think the market is as good as it should be. When we do think the market is on almost a full swing, you're going to see us spending real marketing dollars, launching what we call AGBA money. I can tell you, it's all ready. All the tech work has been done through 4 generations of management. We have test marketed it. It's a well-received product. We have high hope for it, but we are not launching it until the economy in full swing. We're not in a hurry. And the last thing, this is a good page to talk about without giving too much, without giving out the range, is our tech business is in the midst of shifting from building infrastructure, from building analytical tools to AI. We are going through a generational shift at this moment, okay? And we're very lucky we are making the shift as AI is all the rage, okay? And one of the things people, when they look at AI and they miss about it when it comes to implementations, is where are the data? Do you have the data? We do. We have a lot, okay? The AI part is actually not that hard, okay? It's a data, the crunch work part that takes time, that almost in most cases is lacking. We have data. And we're now shifting our tech team from the traditional tech orientations to a AI expert learning orientations. We are working with ourselves, with our own team, as well as our partner outside. We are very excited about it because we do see a couple important elements in our value chain that can be benefit a great deal by machine learning as well as artificial intelligence. So we are very excited about it. Well, last thing is our AGBA Health. Again, as I mentioned earlier on, we bought that business 2 years ago. It is a very old-fashioned business in Hong Kong. Healthcare in Hong Kong is very good standard. It's high caps. But unfortunately, it is very backward, very old-fashioned. It is not technology advanced. We are doing technology advanced healthcare at this moment. I would say we are just at the beginning. We are in the first inning of the whole thing at this moment. We're just in the midst of digitalizing our entire operations. We have still a long way to go. This company will give us a lot of synergy, especially in customers and customer assets, both ways. And you're going to hear more focus from us in year 2024 and 25. And we have high hope for that business. Again, we're at the very beginning of the integrations of this business. We're just upgrading everything from customer data, healthcare data, to hardware, software, decorations, okay? We have a long way to go. I won't go through in great detail. Digital marketing is something that we spend a lot of time at our company doing. When I went around the world seeing investors one-on-one, one of the most frequent asked questions is, how do we get new customers? The answer is very simple: branding. We are in financial services business. In our part of the world, it's just like in all the other Chinese-speaking world around the world, branding in financial services business is by far away the most important, okay? Customers do research, okay? Who you are, what you are is very important. A lot of people ask us, why on earth we decided to go public on NASDAQ? And the truth of that answer is very boring. Branding, marketing, it's just that simple. There's no particular reasons other than that, because Chinese customers do like U.S. listed company, like it or not. They think is more credible, it's more trustworthy. That's why we did what we did. We went public last year through a SPAC. That was probably a mistake. We should have gone IPO directly instead, okay, which was one of the reasons why our share price is where it is at the moment. Again, we're a very large company with a very small cap, okay? So digital marketing is something that we focus a great deal on because that drives our business. And I would say our digital marketing is pretty much on orbit. There's not much more we need to do except just, fit content into it, put more gasoline into fire. We can tune it up and tune it down, depends on where the economy cycle is. Again, social media, I do think we're very good at it at this moment. And you see us on social media all the time. Anyway, but that's where we are. And I was told the audience now to talk about our technology advancement, our innovations. It's a core part of our business. There are much more to be done. I don't think this is the best slides, the best deck on where we are, but still, it's still great because everything we do, it all goes around our technology, our infrastructure, as well as our people and training. So thank you. Thank you for your time. I'm happy to answer any questions.
Great job. Thank you so much. Yeah, we do have some questions for you. Can you talk a little bit about some new products and some new offerings that you have in the pipeline?
This year, we are most proud for the introductions of the HSBC Life Insurance product. Okay, we are the only company outside HSBC which sell HSBC Life Insurance product. And I've been told by our team that our sales record of the HSBC Life product this year is exceeding our own expectations. So we are very happy where we are. It goes to show our technology, our infrastructure, our training really goes a long way. Okay, we introduced that product mid-year, and it's a home run. It's really a home run. It's a grand slam. We're very happy about it. There are more product that's coming out in early year 2024, especially on asset management and tailor-made for the mainland China market. So, again, we have a very large team looking at new product on an ongoing basis, and they work hand in hand with our tech team to make sure it works technology-wise too.
Great, thank you for that. Can you also talk about the plan to make strategic investments and acquisitions, specifically in fintech?
That's great questions. Simple answer to the question is we have no immediate plan. We have a great team. We are on the lookout on an ongoing basis. The fintech valuation has gone down quite a lot. We haven't seen anything that jump out the page and say, hey, we need to focus and look at this. We do like to make investment in insurance as well as in fund management platform. But again, as I mentioned earlier on, just now, we haven't seen anything that jump on the page and say, guys, let's focus. There are a few that we work with, but they're not good enough for us to write a check to be a shareholder. I think for the time being a partner or vendor is good enough. The market still requires quite a bit of shakeout from what we can see.
Yes, it is. Question from Terry Conley. Terry says, you talk about the bottom of the stock. So can you address if the company is raising money by means of stock coming into the market? And if so, talk about that for us. Is there a timeline to when it might end?
Can you repeat the first part of the questions?
Yes. So you talk about the bottom of the stock. Can you address if the companies, are you raising money by means of stock coming into the market?
Well, we do like to raise capital because, again, as I mentioned earlier on, we do see the economy is turning around. We do like to raise some growth capital, but we're certain not in this share price, okay? And we have a team of colleagues who are very focused on diving into the dynamic and the reasons why our share trade the way it is. It went public last year at 10. It trades below 1 at this moment. Our company is doing great. Our company now is better than this time last year, so it doesn't correlate. Okay? A hedge fund manager once told me, our share price should come with a reverse health warning. Should warn people that our share price do not reflect on the fundamental of our company. I do agree that. Okay? And we're going to come out in coming days and weeks in addressing these issues directly. But again, thank you for the question. Yes, we do like to raise growth capital, but we are very picky. And at the right price, we will do it. This is certainly not the right price.
Jocelyn Singh wants to know about your sales team and how are you retaining them? Talk about their compensation if possible.
Oh, the sales team is well, number one, I do think we have a fantastic sales team, fantastic. And we have chart to show you. We are one of the most productive in the regions, if not in the world. Okay? So that's one. So they themselves are fantastic. And how we retain them, number one, I think our technology platform, our infrastructure platform, what we provide them is first class. Okay? There's no one else who offer what we offer. Okay? And I would say we charge them for it too. Okay? But I think we provide very good value for money, very good value for money. We enable them to do very good business. So that's one. Number one, they're great people. Number two, our infrastructure, our tech, what we call the one platform, I do think is fantastic. And number three, we do pay them well. Okay? And number four, and we're going to offer stock very soon when our share price going up again. I often tell people when a company's stock is $18, no one wants it. When it becomes $58, everyone was chasing for it, even if it fell down to 35. Okay, so when your share price in the low, no one wants it. When it went back up again, everyone wants it. So that's why we are so emotional and so personal about our share price. Not because we own a lot, not only because we own a lot of share ourselves, but more important is we're not afraid of our business. Okay, so number one, we do have a great team. Number two, we have fantastic infrastructure. Number three, without a doubt, we do pay well. Okay, and number four, when our share price went back up, we're going to be pretty generous when it comes to using shares to lock people down. I came from a school of owner managers. Okay, I like to have everyone own the shares of our company.
Perfect. Well, thank you so much. Great presentation. It's wonderful to have you back, and we look forward to seeing you again with in the future with some updates.
Talk to you soon. Thank you.
All right.
Bye-bye.
Thank you. Okay, everyone, stay with us. We'll be right back.